What do you get when you take decades of business experience and trading experience and combine it with the new opportunities that crypto presents, and you have Brett Fogle, my next interviewee? Brett has a unique perspective because of the wisdom and experience that he has from his past, but he sees the opportunity in this new thing called the crypto and blockchain space. And we take a really good tour of the neighborhood to understand it, to dig into certain areas and illustrate what is the possibilities for people like you and me. It was a really informative interview that I think has a lot of practical applications for you. So let's jump right into it. Thanks for coming in to have this conversation with me.
Yeah, my pleasure. Thanks for having me.
So tell us about your entrepreneurial background. What kind of work have you done in your life? And then we'll talk about what got you into crypto.
Well, the long version of the short version, I started at age 7, used to ride my bike around the neighborhood and put flyers in all the ugly mailboxes. And so my dad and I would go to the hardware store on the weekend and put them together. He did most of the work, but Brett's mailbox service was born, and did about 100 mailboxes. And I think it's a good business to this day, but I moved on.
That's great. 7 years old, that's kind of fun.
Yeah.
So where'd you go from there?
So moved out to Washington, D.C. My father was a scientist and a PhD, worked for the government, and used to go down to the South Pole, and got tired of doing that, so we opened a video rental store in 1981, and we grew it to 24 stores in the Washington, D.C. area.
From scientist in Washington, D.C.
Yeah.
to video stores. That's kind of a leap. But
An interesting guy.
Yeah, I might have to do a whole nother interview on that alone, but please continue on.
So the goal was to get to 25 stores and open the 24th store, and sure enough, a little company called Netflix came along. But around that time, I'd also graduated college and opened a pet supply store in one of the buildings that we owned, bought through the video store, actually the corporate offices. So I was in the pet supply business for about 8 years. Terrible business, but I was able to make it work and sell it. And along the way, actually adopted a dog to Sonny Bono, which is interesting. That's another story.
Yeah.
But that led into water gardening. It was sort of an off perpendicular path. And at one point, the internet, right in that time frame, the internet was coming around. So a couple of years later, I was selling $500,000 worth of pond supplies and pond equipment. But wasn't what I wanted to do. And half the time in the pet store, nobody was coming in, so I taught myself trading, and kind of led to where I am now in a roundabout way. Was trading on E-Trade back when it was a green screen and a flashing cursor.
And what kind were you doing, like day trading or like swing trading? Like what kind of time horizons were you on?
Sure, swing trading mostly, and was fairly good at that. It turned 3,000 into 30, 30 into 80, and then heard about a guy across the river who was day trading and thought, hey, that sounds like fun. Let me go do that. Went and found out where he was, opened an account, and sat next to him and thought, I'll just do what he's doing. But invariably, when I was buying, he was selling it to me. So I quickly turned 60,000 back into 6.
Oh boy!
And
wow.
Realized maybe I don't know what I'm doing. So then turned to option trading, and got lucky. Made all the money back in 1 month, December '99, and thought, hey, I'm going to be a millionaire. I'll just keep doing that. And went all in on make a call options January of 2000, and we all know what happened. Turned it all into zero, and then decided...
You paid quite a bit of tuition along the way.
Oh, yeah. Trading is expensive in ways, in other ways you don't realize.
Yeah. So what happened after that?
Well, I figured maybe I still don't know what I'm doing, look for a quality education in options, and really couldn't find any. So I put my feelers out into small trading buddies and got in touch with a guy who used to be the floor trader on the Philadelphia Exchange, was the specialist in Dell computer options, and they had gone electronic and didn't need him. So he was looking to teach. I was looking for a teacher. Started a company on the proverbial kitchen table and down in Florida where I had moved and got married, and we grew it to an Inc. 500 company in 3 years.
Wow.
And had a good run at it. Got into Forex trading, but the business side was challenging, and had some ups and downs there. Ultimately wound up selling one of the companies and got out of trading, got out of the whole financial marketing and information business for a number of years, and took a detour
Wow. So then how'd you end up in crypto?
Well, the detour was I went back into internet marketing and for 5 years was teaching how to start online businesses. We were speaking around the world and I wrote a book, and then COVID happened. So travel done, events were finished, but really I was always wanting to get back into trading and had dabbled in crypto along the way. Bought my first Bitcoin at $20.
$20?
But wound up spending it at the same time. The short version is when I was running the option trading company, had read about a venture fast pitch up in Orlando, drove up and it was late, so I missed it, but I wound up talking to the guy who was founding BitPay, one of the early Bitcoin processors. So I said, tell me more about it. We went out for drinks and he said, well, give me $20. I gave him $20, downloaded a wallet, somehow downloaded this Bitcoin on the condition that I would pay for drinks and appetizers. So that was my, I guess now $40,000 happy hour, which may ultimately be a lot more.
Wow.
And really kind of got out of it with the idea that I'll think about it, keep an eye on this, and just got busy. Dabbled a little bit in 2018 and wasn't having a lot of success with it, put it off again, and as many of us in crypto in December 2020 sort of said, hey, this is heating up again. Let me see if I still have any of that crypto, and figured out that I did have some Ethereum and it had gone up 4 times by me forgetting all about it.
Wow.
And that was sort of the catalyst. But also I was looking for something more to do, and one of my old business partners back in the option trading days said, well, listen, I've got something in crypto. I need you. Let's join together, and sort of got the band back together, as we say, hired some of our old team. Nice. And that was how I was introduced to my current business partner. And so, yeah, it's been a great run, and we've done over $1 million for just in selling, the how-to newsletters and software, and that's kind of what we do.
So, newsletters and software, what are you writing about in your newsletters?
So the newsletter starts with it's really more of a community. The monthly newsletter starts with a Bitcoin overall, where are we in the state of the market. We do give some altcoin picks, usually 1 or 2 a month, and then the backstory and research on each of those. And I've had a lot of success, a little bit of luck, but.
Yeah, the old adage, you'd rather be lucky than smart,
Right.
comes to mind in some of these scenarios.
For sure.
And what does the software do?
So the other partner that I have and had met through my old friend who kind of brought me back in, he has some proprietary indicators that he's developed. He's a 25-year trader and used to trade professionally, and he's a quant and a programmer. So if you take a programmer and a trader together, you'll have a much better insight into the markets. Right. So we've developed some unique indicators that have been also helping.
So what's interesting is, when you're trading in the crypto space, you're dealing with a lot of volatility, much more so than probably what you were used to, in your old trading days. Right. So how do you approach trading in crypto? What's your philosophy around it?
It's a good question, and it's not an easy one to answer. There's a lot to be said for buy and hold and forget about it. I have a sort of a keen eye, I think, in the market cycles, and I understand, as many people don't, is that it really is a cycle, and it's going to go up and down. And the idea of timing tops and bottoms is very difficult, but if you can capture that middle 80%, even though if you had bought the top in Bitcoin back in 18 and then the crash and held on, you'd still be up significantly now. I just don't want to hold on to those swings, so I'm more of an active trader. And while I'm in the process of selling a home in Florida to invest long-term, more holdings in crypto that I'm not going to try and time, my philosophy is with the indicators and the skill set that I have to buy into strength, sell into where the cycle is likely to reverse, and then buy back when it's lower.
When you're timing these cycles, are you also shorting going down, and are you doing both sides of it, or are you just kind of buying long, and then if it doesn't quite go, you hold on to it for a while longer? Like, what's your strategy around this?
So I'm doing some shorting. We're not teaching that. It's dangerous and it involves margin. Most people should not be shorting these markets, and it's an easy way to get wrecked, as we say, in crypto. So predominantly you're looking for stronger coins that are moving into momentum, coming off of the short-term moving averages. There's a few other things that we watch along with our own things, but generally those are the best entries. And then you can usually see where they are likely to cycle back down, whether it's, not to get too technical, but one of my favorites is when it gets 10% or more outside the upper Bollinger Band. Generally that reverts to the mean, and mean reversion. Just keep it simple.
Sure.
And not letting it run too far and just trying to catch those upswings, get out, and then it come back down. The danger is that it can keep going up, like we saw with Solana recently. And
well, yeah, you can't be 100% on any of it, right? So
can't.
it's a matter of winning enough times compared to the losing, I guess, and netting it out, right?
Yeah.
How long does it take someone to learn this? Say I'm watching this and I've never really traded before, but I've been, maybe I even invested a little bit in crypto, and it's been interesting to watch the ups and downs. But now I'm starting to think to myself, I want to learn to trade. Maybe I have a little bit of money saved, and I'd like to see if I can make a go at this. How long would it be before I'm maybe ready to actually do this?
And that is the age-old question. It's also a question of how much pain are you willing to experience. There's an old adage that you don't really learn trading until you've lost $50,000.
Yeah.
Now, in crypto, certainly not to scare anybody off, I don't think you need to do that in the old day trading for sure. But I would say that it's within a few months of learning and being patient with it, doing some paper training, which you can do through the free platforms like TradingView, and then and also with the right education. But if you stick with the top 20 or 30 coins by market cap, and you just buy in and hold them, do some research. My suggestion would be hold on to ones you like what they do, and ideally they have a profit model where they can monetize what they do, because the kind of what nobody really talks about is many of these projects, they sound great, but they don't really have a way of making money, or they don't even have a live technology yet. And those are the ones to be careful of, because in a bear market, they're going to get hammered the most. So, there's a lot of research out there. I would just caution to believe everything that you read, especially in the news, which seems curiously timed at places where it's an opportune moment to push the market down for whales, nation states, rogue country, whoever they are. There's a lot of one of the key things about Bitcoin is the anonymity of it. So these are the things to keep in mind. And to answer the question, though, is I would start small, paper trade, and find some good education. And the other side of our business is more of the longer term picks, where we're recommending things we like what they do, long-term potential, has real utility, and some of them have gone down 70% and then gone up thousands of percent.
Wow.
So
those are nice ones to find.
yeah.
The interesting thing, what you just said, and this is, I think, one of the areas of confusion in the whole crypto space, is some of them have profit models. It's like, but this is supposedly like kind of a democratized, decentralized finance. And they don't have companies, they don't have P&Ls and even bank accounts to say, this is how much money came in, this is how much their expenses are. They have a staff. So it's kind of confusing saying, well, how do they have a profit model? It's kind of this weird new thing. They have utility, and somehow they try to feed the benefits of that utility back to, I guess, the people who are holding the coin.
Right.
But it's Bitcoin in and of itself, that's just, you're storing value there. It's not something that really has this other utility, kind of referred to as digital gold. So how do you?
It's coming.
Yeah, you think it is?
Oh,
okay,
yeah.
We'll talk about that then.
Sure. Well, it's a great distinction. So people don't understand Bitcoin. Bitcoin is a great store of value and has a likelihood of replacing gold as the digital reserve currency. That's why billionaires like Michael Saylor have invested billions of dollars of their company's balance sheets, assets, and Elon. So just as a store of value, certainly that's one element, and that's a big one. As far as will Bitcoin ever become the daily transactional currency, we have El Salvador that's just adopted it as their national currency. But the downside is that because there's only 21 million that will ever be minted, people say, well, how am I going to buy a pack of gum with a $50,000 Bitcoin? And not everyone realizes they're designated in Satoshis, which, here's an easy example. Once Bitcoin hits $100,000, a penny will equal, I think, 0.1 Satoshi. So the technology, though, that also most people don't realize is with the Lightning Network, which is happening right now, transactions are seamless, frictionless, and fast. And just recently, depending on when you're watching this video, but just very recently, another company has come out called Strike in conjunction with Twitter to send Bitcoin instantaneously.
Wow.
It's part of the hurdle. One of the hurdles with crypto, like Ethereum, is the cost involved, the gas fees, and the time. You don't want to sit there and wait for a minute or 2 minutes or 5 minutes as it goes around the blockchain. So the security is there. It's just where the speed is what has to get worked out. But I think it's coming.
So, and you think that Bitcoin also will be something that's a part of trading commerce as compared to just saying we're going to store it. Like, when people buy gold, they're not, going to the store and buying anything with their gold. But you think that Bitcoin, it is going to come then as far as it becoming something that people will actually spend on, acquiring things.
Yeah, and it's already happening. Now there will be other coins, and we don't know which ones will shake out. There's Litecoin and Zcash and Dash. There's a number of these, so it'll be interesting to see. But in the global marketplace, I think what we'll see in the next 2 decades or 3, the global currencies sort of waning away, and you'll have more of these digital currencies. So, and exchanging those in between is fairly easy to do. So we really are in the early stages of this, and that's good news for everybody considering and getting involved. It's many people like, well, it's too late. No, it's very early.
Yeah.
So
I think it's to your point, very early. And there's, I think, estimated 10,000 or so coins that are out there right now. So there's going to be a great culling, I think. Where there's just a few that are left at some point. How do you see it?
Well, and just to segment them in a broad scope, there are the coins that are wanting to be used in currency. There's the DeFi or decentralized finance coins. Their utility is the ability to produce yield and stake coins for fairly high interest. Regulation is coming, and I don't see it as a bad thing. I think it's a good thing. But that how to earn money on your investments. The other side, there's a whole scope of utility. One of my favorites is a coin called Helium, not to plug anything. It's just that it's sort of like you'll be able to have a mini cell phone tower in your home or on your roof. And similarly to if you had had one of those tall cell phone towers on your property and AT&T might rent it from you, this is more of a peer-to-peer network, which will power the Internet of Things. So your toaster, your refrigerator, and all these things that are talking to each other will sort of bounce around off these mini antennas, and you as an owner of one can earn some of the token as you do that. So it's really interesting. There's some of the utilities along with file storage being decentralized instead of one big massive server farm, even if it's in the cloud like AWS. It's really there's other ones like Filecoin, which is really interesting. So
basically what's getting set up are these almost products, like you said, these antennas and so on, but there's the incentive for somebody to adopt the use is that you get a certain amount of coins that are related to it.
Right.
And the idea is being that these coins will have value, that people, will say that, this is worth something and you can trade them for, whatever it is you need to trade them for. Right. So is that the future? I mean, is there going to be a lot more of this coming down the pipe?
I imagine so. You're seeing a lot more of that, and it's not really clear how they'll monetize in some cases. Sometimes it's purely on the speculative side of market value, and you really don't own any of that company, which I think you were talking about back in the day with stocks. You have earnings and dividends and shares and value. This is a little more ethereal, but at the same time, as demand goes up and scarcity increases, it will hold its value. And that's sort of a good segue into NFTs that we can talk about if you want.
Definitely want to talk about NFTs, but let's just in the kind of a final consideration on this part of the conversation. the considerations of a trader versus the considerations of an investor are very different. It seems like you're kind of speaking to both, right? Your newsletter is saying, hey, here's some bets you might want to place from an investment perspective.
Correct.
But then there's this whole other world of saying, we're just trading, and what happens in the long term maybe doesn't matter that much to us. It's what we're doing today. So are you doing both? Are you investing and trading?
It's a great question, and I'm glad you asked, because you can actually do both. And so there are some coins I want to own long-term as long-term investment, but I'm going to trade in and out of these cycles, which are inevitable and are normal. Nothing goes up forever, as we know. And so I think there are various ways, and everyone watching or thinking of getting into crypto should analyze what their risk tolerance and time is. Most people don't want to do what I do and trade and read the charts, and so buying in and just holding things, projects that you believe in, you've researched, not what your neighbor said and what you read online or saw on YouTube. I don't recommend following that. Follow things you believe in the long run. But one of the reasons we did get into a more active trader version is we had 20%, 30% that said, hey, we really would like more better timed opportunities. Because of the volatility. It's hard to update people on a monthly basis. And so some of them were swing trading a couple days to a couple weeks. And there's some great opportunities there if you have the time to watch it. And the stomach for it. It's not for everybody, but you can also do it within a longer term time frame.
All right, now let's get into this wacky world of NFTs. So, what's your view on them?
It's a rapidly evolving space, and so here's an analogy. My sister was an art dealer and spent a lot of time learning about art, and I was always puzzled by how anyone can pay millions of dollars for a painting that may or may not go up in value. The value is in that there's only one, and the scarcity, and also the eye of the beholder.
Sure.
But there's also a huge forgery market in high-end art, and so the big benefit of NFTs is it cannot be faked or forged. It's a non-fungible token, which means you can't exchange it for money, but it also can be verified on the blockchain as unique and original. So that scarcity, which drives a lot of the art world, and the verification that it's real is the value. Now, some of the early NFTs, you look at them and say, I can't imagine paying $100,000 for Cyberpunk or, Cool Kitties or any number of the new ones like the.
These are all digital. They're just digital art, right?
At first glance, it's just a JPEG and an image. But what makes them unique is that, let's say you want to release 10,000 computer-generated NFT images. There's the kind of board yacht club ape, or something like that. I don't know if I found. Or let's just stick with Cyberpunks.
Okay.
So they had a number of base model heads, and then different hairstyles, different colors and piercings and things like that. And the computer auto mixed and generated 10,000 varieties, each one unique and verifiable. Well, the fact that they can't be copied and forged is inherently value. I think we're going to see a bubble in NFTs, and right now it's a little bit like the Wild West. There certainly could be an explosion in value soon, but I'm not personally investing in those. I invest more in what I can see. And the beautiful thing about charts, really what I am as a trader, and I've been studying charts for 20 years, is everything else is priced in my opinion. The fundamentals, the news, I imagine it as there are hundreds, if not thousands, of smarter people than I am digesting the news and investing in that either up or down, and you're seeing it in the charts. There are certainly people, not to go down a rabbit hole, but who are watching on OpenSea and watching the trend of the value, usually in Ethereum, and seeing those trends. But it's a little harder to project where those will reverse and come back in.
Can you explain what OpenSea is?
So OpenSea is the leading marketplace for NFTs, and you can see all the leading projects. And it's ironic they call it OpenSea because it's a sea of a lot of different projects. Most are copycat and won't really last, but they're ranking the ones that are moving. And again, I would recommend going if you see something that speaks to you and it seems to be a legitimate project and the value's been going up, then maybe invest in them. But you might be looking at 1 or 2 or 5 or 10 Ethereum, and Ethereum's around $3,000. Recently, a famous football player, I believe it was, or basketball player, paid $180,000 for one of these, and this is what we're seeing. A lot of our people who made money in crypto, though, and they're moving money over to it. One thing I might say that we'll see as the crypto markets come in, if we do see the rest of this bull run, which I think we will, I think we'll have a pullback here in the short term, depending on when people see this, but it'll go higher. And as it starts to top out, I think people will move profits into NFTs, and that's just my guess.
That's interesting. And just to connect the dots, so basically, if you built whatever the art or thing is that you created as an NFT, non-fungible token,
right,
and they're building it on the Ethereum platform, so you purchase these things not with dollars, but you're purchasing with Ethereum. So you're trading your coin for these NFTs, whatever it might happen to be, and they can be other things too. They could be a song, right? They could be multiple other things. Say, hey, I'd like to own whatever that thing is, and I'm trading crypto for it. And it is kind of this kind of wacky place. It's hard to wrap our heads around.
Sure.
But it's almost, I guess, is it sort of I don't know if it's a derivative market outside of the actual crypto space itself, or I guess it fails categorization, like as a reference point, right? It's kind of its own thing.
That's a good way to put it.
Yeah.
And just to talk about that, though, the Ethereum-based NFTs started that, but a lot of the utility, which is driving price increases in other blockchains like Cardano and Solana, they're coming out with their own versions. Well, they have them out. They're just launching. And so it really is the early days in the Wild West. But as you said, defies categorization because most people can't wrap their head around it. Early, about 2013, I was invited to a Bitcoin mastermind down in St. Martin, and we were hearing from some of the early pioneers, like the Larimers were there, who founded EOS. And they were saying, one day you'll be able to share your favorite song with somebody else and earn a little bit of crypto commission on that. Yeah. And we're starting to see that. Back then, we couldn't really understand that. But as you pointed out, sharing a song, sharing something you enjoy, and being compensated for that. So that is where we sort of go down a big rabbit hole. In terms of where we are now, though, it's just the early days. And I think to buy something you love to look at and know that it's an original and likely there will be value in the future, I wouldn't recommend that. I would suggest I wouldn't recommend going and buying a whole bunch of things just for the speculative nature that they're going to go up, because otherwise you've got things you don't want to look at that went down in value.
Yeah.
At least if you bought something you like and it went down in value, you're like, but I like it.
At least you enjoy. At least you get some pleasure from it,
right,
as compared to it being just a non-passionate investment. Saying I'm trading just for the sake of earning, as compared to saying, I actually might enjoy looking at this thing. So it's really, to me at least, these NFTs. There's something there. I can't really quite put my finger on it, and but I think the future of it could get quite fascinating over time. I guess time will tell. So, but for you don't speculate there at all as far as your own investing or trading.
I haven't yet, and it may. But for me, I think that the opportunity now is in crypto and these early projects that are, there's a lot of speculation on where we go from here. And will we have the bull market blow off and then the long bear market, or now that there's institutions involved and that it's more legitimized and is less retail driven, that we won't see these huge 4-year cycles of bull and bust. And I think that that's more likely, but at the same time, I think right now is a great time to be involved and to capture the next leg up, which we're seeing some interesting things on the on-chain metrics, and there's a lot of accumulation. There's a big supply shock coming.
What do you mean by that?
So there's only so many Bitcoin.
Right.
There's 18 million have been mined. There will only be 21 million. And they're estimating that maybe 5 or 10% of Bitcoin are lost. People put it on a hard drive or on a thing in the, there's a famous story of the guy in London who threw away his computer and there's something like $120 million worth of Bitcoin on it. The country or the township won't let him go dig through the landfill, so he's trying to partner with them to go find an old hard drive with all this Bitcoin on it. But to answer the question, so what we're seeing on the on-chain metrics is a lot of accumulation from whales. They're defined as guys that own 100 to 1,000 or 10,000 or more Bitcoin. We don't know who they are by name, but you can track it by the wallet address. So they're accumulating. The supply shock means that because Bitcoin is scarce and let's say there's only 15 million in circulation, but much of that is being held on cold storage wallets. What that means is instead of leaving it on a Coinbase or Binance or Kraken, you can pull it off onto a flash drive of sorts. I mean, it's more secure than that. And that is recommended. That's the safest way of doing it. As a trader, it's difficult to do that. But the supply shock, what that means is there is so much Bitcoin and Ethereum being moved off of the exchanges onto cold storage wallets that the exchanges are going to have less Bitcoin to trade for people that want to buy and sell. And that will rise prices for somebody wanting to buy Bitcoin if there aren't as many there.
So this is the supply shock, so to speak, is the fact that there's a lot of people who are just buying and holding. So for trading, there's just not much there to trade, which would increase pricing is, I guess, what you would anticipate, right?
Just like gold, let's say that we had all this gold in Fort Knox. Not sure if we really do, but let's say we have it all there and the U.S. started buying all the gold around and you wanted to go buy a gold coin. But the shopkeeper says, well, it was $100 for the coin last week, but since I can't get these anymore, the price is now $150. That's a simplistic version of it. And so that has generally driven and preceded large upswings in price. Caveat, I still think from what I'm seeing on the charts, we go lower from here. And then I think the whales and the people who are looking to accumulate Bitcoin are going to really buy everything up. And the other wild card is that we're very close to having the first ETF approved.
So talk about that. So explain what an ETF is and what's the implications of it being approved.
So an ETF stands for electronically exchange traded fund, and that is essentially almost like not a hedge fund or a mutual fund, but where you can buy in shares of the ETF, and that's a fractional ownership of, let's say, Bitcoin or Ethereum. But by nature, if you and I are putting money into the ETF would then have to buy Bitcoin on the open market or Ethereum. And so there are ETFs already in place in other countries. And if you look at the visual on this, of where all the Bitcoin is held, there are countries like Bulgaria and El Salvador and the United States and China. China actually owns a lot of Bitcoin.
Even though they made it illegal?
Even though, well, they've outbanned it every year. It's not to be taken at face value.
Well, so I'm going to steer you back to the ETFs in a moment.
Okay.
But that's kind of a fascinating statement because I know that they have banned it 8 or 9 times.
Yeah.
So what is really going on then?
Well, nobody really knows. My speculation is, well, let's just as an analogy, there's a great book by Sun Tzu, The Art of War. Appear strong when you are weak, appear weak when you are strong. If they wanted to accumulate more Bitcoin, they could be China or Russia, a nation state, anybody, a wealthy individual. Wouldn't you want to buy more at a lower price? So by banning Bitcoin, it kind of helps the narrative of pushing it down lower. But I think there's a different dynamic there. They don't really want their citizens to be autonomous in the sense that and not to get into that and.
Well, we understand, the politics is that, they, from looking through the communist lens, an autonomous store of wealth is probably not something that they want to see happen.
It's not congruent with what they're trying to do in their agenda. So, but so in that visual of who owns the most Bitcoin, the ETFs in other countries are starting to accumulate more of that quantity, and if there's a scarce quantity, a U.S.-based ETF is going to need to buy in the open market. So I do believe in October, I think mid-October, that we'll start to see a rapid rise in crypto prices. Bitcoin leads everything, and without getting into Bitcoin dominance, we can talk about that if you want, but I think the ETF, there's a lot of things lining up to push prices higher into the end of 2021. So the timing couldn't be better.
Wow. And again, as there's more, I guess, bigger players coming in, it creates more scarcity. So yeah, you start to see these things sort of adding up here. Many people have predicted, pretty astronomical numbers for Bitcoin. I think in the very near future, a lot of people are saying it's going to 100,000. Do you agree with that?
I do. I certainly think it's possible. I think 100,000 is reasonable. If we just look at how much gold, silver, and offshore wealth there is, it's $21 trillion. So you have a certain amount of gold, a certain amount of silver, and then money held in offshore trusts and whatever. If we just took 10% of that, or 2.1 trillion, that's right now the size of the entire crypto market space. Bitcoin's most of that. So if Bitcoin can just take 10% of all gold, silver, and offshore wealth, that puts it at 155,000 a Bitcoin. So this is what's happening now, and there's a lot of mathematical reasons why that should and will happen. Will it happen overnight? No, I don't think so. I think the predictions of 300,000 Bitcoin by the end of the year, I think that's far-fetched.
Right.
So at 100,000, I think that would be a good place to either take some profit maybe and hold on to some of that. That is a big mindset that people don't realize. You don't have to buy and sell all of it. If you're in profit, take some of the profit off and wait, or dollar cost average as it comes back down. And that has been one of the most effective strategies over the years, just put a little bit in every week or every month.
What is interesting as you start to think about it, I think maybe a lot of people started with Bitcoin as a sort of speculative investment, saying, put a little bit of money in just in case.
Right.
But now, as that's been growing, and they've probably been investing more as they're seeing it grow, at the same time, we're looking at what's happening in fiat currencies and how much is being printed and how it's getting devalued. And to me, it seems like it's almost forcing people to take whatever fiat currency they have and put more of it into Bitcoin. So now it becomes almost a safe, rather than being, hey, this is this investment to grow my fortune, it's a place to secure my fortune. It's like keeping it safe as compared to saying I'm going to double, triple, or 10x it. Is there going to be sort of that time or that inflection point where that becomes the motivation more than the speculative investment?
I think it already is for a lot of the more forward-thinking CEOs, again, like Michael Saylor, who was really the first to say, listen, the money we have, they had $500 million in their company treasury that was deflating at 15% a year. We printed, I'm hearing a huge amount of the fiat currency. I won't say it because it's always changing, but something like 40% of all US dollars were printed last year during the pandemic. Wow. So simple economics would tell you that the value of the dollar will and should shrink. So if you're a huge company that has all this value and your shareholders expect you to project that value, then it makes perfect sense to put it into a scarce asset that can't be taken away and can't be taken away by the government, right, for example. And so I think that mentality is trickling down to citizens, and certainly, it might be holding gold and silver in the safe, but like you said, you can't go in and buy a loaf of bread with a gold coin. Right. One of we actually teach this in an online presentation that is the parameters of crypto that has to be divisible is one. It has to be scarcity. It has some utility, and I'm probably missing a few of these, but that element, if you go through those, you'll check all the boxes. And I think a lot of people are coming around to that, storing their wealth. Maybe not all of it, but we're at a point where you can't turn off crypto. It's being beamed down from satellites. So there's an argument, well, what if government's outlawed all over? Or what if the internet goes down? I think we're past that inflection point, because it is on, the blockchain is in space, it's in satellites. If you can get a mobile signal, you can access it.
Yeah, and I think an argument has also been made that if the internet goes down, you're going to have a lot more to worry about than your crypto.
Sure.
Yeah, there's going to be a much bigger situation for you, because if it goes down, then too, how do you access your money? How do you access anything? And then how much gold can somebody store, or should they store, at home in and of itself? So, it starts to make a lot of sense, saying that. I think, kind of that they're past the fail-safe, or whatever you might call that line that says there's no going back where this thing is going to go to zero. We have had people that we interviewed saying, let's see what some of the naysayers had to say about this. And of course, they argue there's no real value there. It's all made up. But it's just completely ethereal and so on. And it's going to go to zero, and everybody's going to lose their money. And at the same time, as you have witnessed, there's institutions and big players coming into the space now, and they're sort of like a bedrock that I don't think allows this thing to go to zero or lets it fail.
And many of them have been saying that don't buy Bitcoin, and then months later are turning around and saying, well, we recommend buying Bitcoin now. And not to name any names, but a very popular stock newsletter advisory was in October 2020 saying, we don't recommend Bitcoin. It's probably not going to work. 3 months later, we have the slide in our slides. 3 months later, well, we were allocating $5 million to Bitcoin, and you see this all this coming around, and the FUD, which fear, uncertainty, and doubt, has been washed away. Every year, it's something else. Of course, China is one of the main, so I think that we're seeing an overwhelming groundswell of not only companies, but countries and individuals that are seeing that this is the wave of the future.
So at this point, one of the things that you do and that you're also educating people around is trading. And are we still early? I mean, is it like, if you're to say, there's a point where there's a certain amount of traders that maybe kind of peak, where you have as many leaving as there are coming into the game, and it kind of hovers. Where do you think we are in the curve leading up to that when we talk about crypto?
Just in the early stages. And I think a lot of it is people are scared. They hear about the volatility. The volatility is really where the money's made in the real trading. So the gunslingers and the SOS bandits and day traders of old are loving this volatility. But as more people get in, it'll smooth out the volatility. We won't see as many of these 50% swings, 30% swings. Now, we love it. We caught a 67% swing in 5 days last week.
Wow.
And one of these coins with a great ecosystem. But the idea of, is it early? It's very early. And also the big hedge funds and mutual funds, there's a limit, a threshold where they have to see enough market cap for them to come in and be able to buy in. And we're starting to push those boundaries. The crypto market's total market cap was just over $1 trillion in the last 6 to 8 months, and now we've been teetering up and down below $2 trillion. We're likely going to see 5 and 10 trillion market cap in the next, I'd say certainly by the next bull cycle, but maybe the next year to 2 years.
Wow. With trading, risk management's a big aspect of that. And in traditional equities, let's say if you're trading in that arena, people will put in stop losses, et cetera, to kind of protect themselves. But the volatility here doesn't really allow that. So is it an entirely different strategy for trading when you're coming into crypto?
It's a great question and very timely. And it's not that it won't allow you to, although you have the top tier coins that are on the bigger exchanges, let's say Coinbase, Gemini, Binance US.
Are any of those better for traders compared to investors, or which ones do you recommend?
Sure, and so it's kind of the same answer. So for a beginner investor that's used to your E-Trade and Fidelity, probably want to use a Gemini, which I like, or Coinbase, having some growing pains. So their base level packages allow for buying and selling. When you get into the active trader platforms, you can do things like limit orders or stop losses. On the surface, those sound like a good idea. We may go down a rabbit hole a little bit here, But these exchanges make money by the fluctuations in the prices. And to say they manipulate prices maybe is a little strong, but yeah, they do. They can move the price down where they want and up. So if you and I and a lot of people have our stop losses set here, in the old days they had actual market makers saying, well, let's kind of take it down. These are mostly algorithm driven nowadays. And if you're trading hundreds of millions, if not billions of dollars, would it make sense to hire a programmer to build an algo to basically, but in the end, it's the benefit is it's creating a more efficient marketplace. What we do is use third-party software that will allow to put a take profit level or a stop loss that does not show on the exchange. So the algorithms and the market makers can't really see it, and they won't gun for stops, as they say. So probably this is over the head for most people watching, but there's a lot of opportunity in active trading if you have the tools and mindset and the skills to do it.
Well, you're saying, so I didn't understand. So you're saying that if there's transparency around where people have stop losses or profit taking, and that the big fish can kind of analyze that and say, here's where we can feed today.
Exactly.
Wow, I didn't know that. So having it outside the system would, and is it something that just alerts you and then you manually would make the trades based on what the third-party software was saying?
No, and it's not our software. I don't need to, but it does exist. And essentially there are different ways we do teach how to use it in the active trader group we have, but essentially you could say at this level, turn it into a market order to sell or buy, and the software will shoot it to the exchange right there.
I see.
You can do it that way or as a limit order that shows on the exchange, or a conditional, which means if price hits X, then send order. And it does allow for the multiple orders at the same time. Typically on an exchange, even in an active trader platform, you can set a stop loss or a sell profit-taking limit order, and generally not both. The software out there these days will allow you to do that. You can do trailing take profit, so when it goes up to $35, instead of sell, hold, only sell if it comes down 3% or 5%, whatever you set it. So if there's a big run, it'll keep you in longer, whereas if it pulls back and maybe going lower, then. So the point of that is that it's a great time to be an investor, because these tools didn't really exist. Certainly didn't exist in crypto before, I'd say, the last 12 months. So it's
that's interesting.
Yeah.
Well, this is kind of a fascinating world, and I think opportunity, especially now. I think there's so much disruption in the world that people are looking for other ways to create income for themselves, and I think anybody who's got maybe a little bit of capital to invest, they could take a hard look at trading in the crypto space as a new way for them to earn a living.
Well, I was reading an interesting book on the way out here, and I won't name it, but we're undergoing sort of the fourth revolution. And we went through this sort of hunter-gatherer, the farming revolution, the industrial revolution. This is the backbone. Crypto and blockchain is the backbone for the information industry, or the information revolution. And so it's going to change everything. Kathy Wood was talking recently about the fact that we haven't been on the cusp of 3 different technological revolutions at the same time, whereas 100 years ago it was the automobile, the airplane, and I want to say the printing press, but I think that's wrong.
Yeah, it's earlier, yeah. I don't know what the third one might be, but automobile, airplane, train, maybe?
Probably, yeah,
Transportation,
railways, that's it. Now we're really on the cusp, because of blockchain and crypto, huge advances in both robotics and health and financial currencies and finance. And so, what we can see is a very rapid rise in all of these. But the bigger picture on that is, we're having a lot of turmoil in the world right now. Different countries, different nations, even within nations, people not getting along. And what's fascinating is this can be the backbone of more of the sovereign individual versus the sovereign nation.
Right.
So in the future, we might see where we can choose our own sovereignty, which means nation rules laws like we choose our own health insurance or our own religion, but coexist in the same physical location. So there's a lot to be worked out for that to happen.
Sure.
But we are headed in that direction, and certainly a lot of exciting opportunities, more than we've ever seen before, way bigger than the internet.
I'm glad you brought that up because I think potential positive futures is something that we all need, or maybe another word, hope. Is that there is a lot of polarization in the world, a lot of conflict, and I think COVID is amplified everything and created more separation and more concern, but the idea that we can have a return to sovereignty, because right now the pendulum has swung to more tyrannical measures, more government powers, and more censorship and all that kind of stuff. But many times, as the adage goes, conflicts clarify. Maybe them doing all that now, if we have the technological ability, and it, to me, I think it almost looks like an unstoppable force. It's almost like China saying Bitcoin's illegal. Well, I have a feeling that Chinese people are going to figure out how to get Bitcoin and figure out a way around it, stay autonomous, et cetera, that it almost pushes it in the other direction. So I hope that vision is right that you laid out, the idea of some sovereignty and independent responsibility based on one's individual values can manifest based on what's happening with blockchain and with decentralized finance. So it's a great vision.
That's great. You clarified it very well. And it goes back to the Victor Hugo quote that you cannot stop an idea whose time has come. Yeah. And I think the idea is time. It's an idea whose time has come, and eventually, it will permeate into all levels of our society and our daily lifestyle in ways we can't imagine yet, which is the exciting part. And I think the hope comes from being a part of what the next phase of human evolution may be, at least from a physical format. We're certainly evolving mentally and other ways, but there's so much conflict. The current nation state thrives on sort of the punitive way of getting things done, and by becoming more of that, having that more sovereignty to aspire or affiliate with the idea of your own nation, then a lot of things have to be clarified still, but at least that gives people hope that they don't have to be told what to do. They have that choice.
It's sort of ironic too, as you laid it out, because this is the opposite of varying forms of statism, like socialism or communism, where they want to redistribute wealth, and it becomes shared misery, as history has shown. But in this case, literally, the greatest of autonomy and the technical vehicles to do it allow for a redistribution of merit-based wealth, meaning that a lot of people who had no shot in impoverished areas of the world, Africa, parts of India, where have you, that